following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. Let's make it a great one. Kicking off the summer. What a beautiful thing that is. This quote's by Christian Larson. Live in faith that the whole world is on your side so long as you are true to the best that is in you. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow down 41, NASDAQ up 14, S&P's off 5.5, gold contract down $4.70, traded $1,170 an ounce. Silver down 5 cents at $16.04. Copper $2.69 a pound. Light sweet crude up $1.03, trading out at $59.03 a barrel. Bonds are getting whacked once again. You get the 10-year down 27.6. 125.02. ABC structure on the way down. 30 years down 1 full point, plus 24 ticks at 149.20. King dollar up 900 ticks, traded at 96.39. The euro is down 124 at 111, and the yen is up a penny and a quarter at 125.64. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. We'll start with the SPY. So what do we have with the SPY, folks? You get a sideways move out here today. We are at 210.02. And what you can expect here, I expect these markets, you'll have a slight sell-off into the close, nothing heavy. Bottom line, this is the middle move of the move that had started on the 21st of May. That 21st of May, we're at 213. Bottom line is that this is setting up the little move. This little baby wants to run down to 204. If we take a look at the future, what you're dealing with on the futures is this, folks. We're going to get a close on a weekly basis here, not only just under the highs that were generated, but we're going to get a close inside the cash market. Oh, it's going to be really close, actually. Okay, so check this out. We're at 2059. 95 rather, 2095. You get a close under 2093, and that swing point is December of 04. What that would set up is that sets up a 1972, which, of course, 120 points down. We close where we are. That would bring that down to 2039. That's still $60 down. But bottom line is that we're going to get weekly closes out here that major failures. That's the way this is shaking out at this particular point, unless you rally about 40 S&P points. And what we do have is that you have the contraction. Let's go back to the SPY for a second. You have the contraction on higher volume, and that's bottom. Let's see. There we go. Okay, so we're coming down. We had made a high up there on the 22nd, the week of the 22nd. We made that high with 345 million shares. We're coming off that high with 512 million. Bottom line, this market wants lower price. The volatility, everything out here was in spades this whole week. And you got to remember something. So summer trading, the way it shakes out here is that you got Tuesday, Wednesday, Thursday in order to get real volume in the marketplace. Now, what's going on today is that we have volume in the marketplace, and you have the sideways move. So that's really dangerous because it's a subtle move sideways. You know, market's tired, because it's used up a huge amount of energy, because this week we have basically gone back and forth 12 S&P points. Let's see, where's Friday? Tuesday, Wednesday, yesterday we went back and forth 14 S&P points, meaning up and down. How we close out, we're closing out down for the week. Market's exhausted from going back and forth. Bottom line, folks, get your stops in. NDX 100. We take a look at the NDX 100. Use the 3 Qs in the NDX 100. Still not much movement out there. We are at a price point of 109.42, and the 3 Qs would have to get back inside this number right where we're at, which is just a mind blow. It's 109.42 to be exact. And what that number is, that is the high structure of the March 6th high. That's how this shakes out. So we'll see where we close. And it makes a difference, folks. That's the bottom line. It does make it, that 1 penny is going to make a difference. If you close over it, your probability is higher that, guess what? NASDAQ's going to continue to try to get up to the highs. Now, the NASDAQ has been trying to make a high for the last 6 weeks. You know, it made a high 6 weeks ago. Been trying to get really bust over the high and break out, and it hasn't been able to do it. The IWM, we take a look at the Russell 2000. Russell 2000 out here is trading at a price point of 125.46. That little baby came down with a vengeance yesterday. What you're doing out here today is you're getting it all the way back. Now, what that's setting up is that is setting up, number one, and if the IWM closes where we are now, oh, this is going to be, what a close this is going to be. So check this out. We're at 125.43. The IWM needs a close over 125.47. 125.47 was the high that was generated out here on the week of the 22nd of May. So if we don't get that, that's saying, okay, you're going to go down. You get that, and this is what we'll end up doing here is pretty cool, is this. You want to have some harmony going on. So if we have the NDX closing over the number I just gave you, well, we'll see whether the Russell closes. They both close, your probability goes higher that next week we're going to shoot for a high again. Both of them go lower, guess what? That's saying it's going lower. The S&P right now is the weakest index out there. And the S&P is basically generating, saying it wants lower price. What I do expect we're going to see here is not heavy selling coming into the close, but you are going to see selling. There's going to be folks that do not want to go home long after this type of week. That's what it comes down to. And it's not that we're down that far. We're not, folks, okay? What it has to do with is the stomaching of the volatility that is in this marketplace. For investors, we go take a look at the TLT. With the TLT, now the TLT is the 20-year bond fund. That baby is in a ABC structure on the way down. And it's a monster, too, by the way, folks. It's a 10 point, it's a 10 of 14, 32, 22. Yeah, it's 14 bucks. So it's going after 110, and right now you're at 117. This broke the B point on the daily, and it basically, let's see, and we're going to break it on the weekly too. Yeah, we've already broken it on the weekly. So weekly and the daily, you're breaking the B point, breaking it with volume. That's setting up a 110, and with that means is that the bond prices are still going to go down and the yields are going up. Right now we're at a 2.404% on the 10-year basis. So if you're looking for a mortgage, if you're refinancing, if you're buying a house, go do it, folks, okay? Because the bottom line is that even if it's up a quarter point, which I suspect, you know, a 30-year still is going to run at about 4.1 right now, 4. Maybe, yeah, 4.14. Bottom line is that, you know, the cheaper you can get it, the better off you are. And get a 30-year, folks, okay? Now, let's go over to the gold market. This was so sweet in the gold market today. It was amazing. Fridays in the gold market are vicious, folks, right? Bottom line, they always are. You know, well, they are when you get a downtrend going, which, you know, we've been in. They couldn't whack gold today. They got it down to 1162. It did 140,000 contracts. Well, that's not even close, folks, because you're coming into the strength that we did coming off the lows in March. That's when we went from 46 up to 75. Bottom line, rejected lower price. You closed at 1171. And what 1171 does, 1171 keeps you inside the range. So bottom line, you can expect higher prices. And the King Dollar. So King Dollar was the story out here today, folks, when the jobs number come out. Great jobs number, by the way. So King Dollar. What did King Dollar do? King Dollar, folks, all this King Dollar did is this. Well, price-wise, this is what it did. It went up over 1,000 ticks, which is a penny, okay? It's an ABC down. You did 74,000 contracts, which isn't bad, by the way, but guess what? You needed in King Dollar over 85 to 90,000 contracts. This baby, good old King Dollar, is building cars for lower price, you know? So you can expect, as we into the summer, as we move into the summer, a lot more volatility in these markets. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials are down 43. You get the Nasdaq up 13. S&Ps are off 5.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow down 62. You get the NASDAQ up 9. S&Ps are up 7.5. And you're going to see some selling coming into this close, folks. I want to show you something here in the DAX. Okay, so if you are trading intraday, there's certain things that you can take advantage of to bring the probability much higher that you would be right on the direction of the markets in general. And the divergence that's out there many times are pretty cool. One of them that was out here today is this, is that, and the market traded the same way, by the way, okay? The DAX in Germany, folks, is so volatile, it's unbelievable. Bottom line, what the DAX had done is this. The DAX, you know, traded down to, well, we closed out at 11,197, okay? We traded down to 11,157. Then we traded all the way back topside into the price point of 11,280. So at the high, it was at the high of the day an hour before its closing. And what does it do? It sells off all the way into the close and then end up selling down 143. Okay, now that being said, I'm going to come back over to our markets, because that being said, what ends up happening is this, is that our markets intraday and all week have been basically, you know, thread and water, but on a downtrend. Our S&P, our NASDAQ, the Dow, all of those were basically flat all day. You're coming into a Friday, and if you're trading that out, it's like, well, this is kind of nice, you know, because in the summer, you get the first hour, hour and a half that has some real volatility. You know, if you're trading both sides of it, you can do some bread. Other than that, it flattens out to the very end of the day. So that being said, you know, I'm not looking for a huge amount. What I am looking for is this. If you happen to be watching Tiger TV, if we look at the NASDAQ futures, well, we're at 4479. Well, more than likely what you're going to see is that they're going to gun this into the 7-0, which is not a huge amount, but it's $9 down. What we do have, and I don't think we'll get this till next week, we have a high volume swing low. When we came down this morning, these futures are going to get into the 4449, okay, which is $30 down from where we are on the NASDAQ. If we go take a look at the S&Ps, this is how the S&Ps are set up. The S&P has the high volume low down here at 83, 2083. We're at 92. I suspect what you're going to do, you can see this, and this is going to be orderly, by the way, because we've had volatility today, no doubt. But what you're going to see, I suspect, is that this is just going to basically not a hard sell, not that people would freak out. It's going to be a slow sell, just coming into it, flatten out. But I suspect with this cash, I mean with the future S&P, is that we're going to be dealing with about 88. So that's only about 3 points. Is it 88? Yeah, it's 88. So it's only 3 points lower from where we are right now. If we take a look at the strength versus the weakness inside these indices, this is what you have. Dow Industrials, which leading the Dow, it's down 56, but what's putting juice into it is J.P. Morgan. That's up $1. You get Caterpillar up 49 cents. We have Goldman Sachs up 93 cents, and Visa is up 24. Now, it's taken away from it on the way down. You have Visa down 86. Walmart is down $1.07. We got to go back to Walmart. Walmart's in trouble, folks. Whatever's happening in Walmart, it's in trouble. Intel is down 36, and Coca-Cola is down 45. Inside the NDX 100, what do we have? The pluses versus the minuses. Regeneron is leading the biotechs. That's up $20.54 at 539. That is what's putting juice into the NDX 100, even though the NDX is negative. Green Mountain is up 256. You have SanDisk up 165, and AVGO is up 258. Now, taken away from it, because we know it's in the negative, you have Vodafone down 67. Dollar Tree's down $1.26, and you have Walgreens off 113. When you actually take a look at the NDX 100, you can see that, well, actually, let's go over and take a look at the IBB, because the IBB and Regeneron, bottom line, is keeping the IBB higher today, and that is insulating the NASDAQ composite, folks. The IBB has gone from 359 to 367 today. And what this actually is, which is pretty wild, if you happen to be into candlestick charting, this is actually, it looks bullish, but that is actually on a daily basis, that is a last engulfing. A last engulfing, folks, goes like this. A last engulfing is that you start out lower, you finish at the highs, and you do that on after an uptrend. And we have been in an uptrend in the IBB since April 30th. April 30th, the IBB was at 330. Now you're at 367. That is on your daily basis. On your weekly basis, let's see. Oh, look at this. Check this out. This is sick. On the weekly basis, you got a hanging man. This is a good indication that the IBB also is going to be giving it up. The IBB has been the toughest to give it up. The IBB this week has gone up in 7 million shares versus going downtown on 17 million. So bottom line is that you get distribution in spades out there inside that IBB. Some of the high volume stocks, and you know, it's possible that we're going to have a high volume market out here, by the way, too, today. We have Marbell is down 67 cents. You get Citigroup up 83. JP Morgan is up $1. JP Morgan is trying to break out, by the way. It's over its highs, and it's trying to get away from this high, and it's having a hard time doing that. Right now, let's go. You get a gap higher today. The volume's pretty good too. The volume is good, not pretty good. It is good. You know, we'll see whether it can break out. You know, the JP Morgan would have to get into your 67.37. That'd have to get it doesn't have to get that much higher to really get away from that price. You know, the price you're looking to get away from is the last weekly high that was generated out there, which is 67.18. You know, you get away from that like $3. That would say quite a bit if you get away from it for $3. The reason being is that with or without volume, if you get away from price, it'll build another floor. That's just how it goes. Our phone number is 877-927-6648. And what you're going to see out here, you're just going to see the sly little selling inch by inch as we start coming into this close. What it looks like, folks, is that we have set up is this. You're going to have a doji on a weekly basis in the middle of a trading range. And what happens with a doji in the middle of a trading range is that it marks the halfway move down. That's how this is set up. You know, so next week, you are over window dressing, and window dressing, of course, didn't work this week. You're still in summer trading, but what we do have is that the volatility is in spades, and what's really unusual for today is that we actually have volume in the marketplace also. So bottom line is that dollar wants lower price. Bonds want lower price. Market wants lower price. Gold wants higher price. And gold is lower. The thing that's amazing, which is so cool, is that they had every shot today. They had every chance today, all the bears in the gold market had every shot to take gold down $50, $60. Couldn't do it. Just couldn't do it. The first sell down, folks, got gold from 1174 to 1164. That had volume. The first get-go down had volume, and then guess what? Volume died in the vine at the 62. It snaps all the way back to 71. And 71, as I said a little bit earlier, keeps it in the higher trading range. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials down 62. Nasdaq's up 8. S&Ps are off 7.5. We're going to break back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow right now is down 48. Nasdaq's up 11. S&Ps are off 7.5. And the Federal Reserve. Okay, so let's check this out. Where is the Fed? So the Fed got FED. The Fed got subpoenaed by Congress in order to what had happened, folks, is that the Gray's book, I'll find this thing. The Federal Reserve had spoken with one of these firms that sell services to hedge funds to give them an idea of not only just what the Fed is thinking and doing, but what, in fact, other large corporations are doing. And so the bottom line is that this company had inside information, and it came off the Fed. The Congress had subpoenaed Janet Yellen and the Fed for the documents. Bottom line is that they just came back to the Congress and told them that they can't give them all the documents. And the main reasoning is that they're in a criminal investigation with the Justice Department about that whole deal. So we're going to be hearing a lot about this over the weekend, folks. That's the bottom line. Because there's no doubt, of course, the Federal Reserve is supposed to be out there basically giving no one anything. And I suspect it's not going to be the Fed that is going to basically take the rap for this, okay? They're going to basically hang this on someone, and we'll see where that hanging gets done. But that's how this thing, it looks like it's going to be shaken out. We go take a look at the, let's go take a look at the oil market. So what we had out here today is that OPEC was meeting out here today. They do their meeting a couple times a year in Vienna. That whole meeting, they said, hey, listen, we're still going to pump out oil. That's the bottom line. We're not going to pull back. And, you know, when you look at the market, when you first hear that, it'd be like, okay, that should be bearish for the market. Bottom line is that the oil market went up on that news. But when we look at this technically, okay, what is set up here is this. So watch how this shakes out. This is pretty cool. We look at this on a daily basis. And what you have happening is that we had a sign of strength. That sign of strength that was generated last week had some decent volume in it. The day I'm talking about is on the 29th. You go up and you go up nice on the 29th. Well, we came back down and tested that today, and it didn't have more volume, but it had a lot of volume. That's saying that, you know what, we're going to be back down into the 56.83 area once again. So the way that that is trading right now is that is bottom line saying that, guess what, oil does want lower price. You know, so we'll see how this is going to shake out. But the way this is playing out right now, it looks to me like instead of when I was first looking at this looks like an ABC structure on the way up. You know, a beauty too, by the way, not a small one. I mean, it really comes to the point. Your 8 point is that low out there at 47. You know, we went from 47, that low that was generated March 18th. It was a rocket ship. It went from 47 to 63. Now, of course, we were all elated because, you know, we came down off 100. I mean, it was a nonstop $108 down to the 47. Now, the way that we backed down, it's like, okay, is this an ABC up? And the characteristics were pretty close, but the way it looks right now is that no, it's not. And it looks that, you know, 56 is going to be coming at us. And if you get down to that 56 level and we have actually juice behind the move, that's going to set up a whole different parameter. The reason being is that, let me pull this up here. What you have inside the XLE, you can see inside the XLE that it's pretty clear that these oil and gas stocks cannot get any movement topside. If we take a look at this XLE, what you're going to see, and the XLE, by the way, folks, is one of the first indices that came off the high, and we're trading at 77. It wants to run down to this 75. And the most bizarre part about this is that when you think about oil and gas, so check this out. When you think about oil and gas, you think that the transportation business would be doing great, right? Well, the bottom line is that the transports are in a bear market. The transports are down over 40%. The transports are basically hanging right at the October. They're 100 points above the high volume 2014 October swing low. You know, they're above the high of that low. But that is saying that those transports are going to be the first ones that more than likely, as an indice, hit that number, and the real key is going to be how we hit that number. Because if you hit that number and we are generating fuel on the way down and it really has gas, then get out of the way, man, because that is saying that those transports are going a lot lower. And the most bizarre part about that, to me, is that they're going lower. Their expenses should have come down dramatically, you know. But you know what they may have done? Now, this is really cool. What they may have done is that they may have locked in oil at a much higher price. Because if they did, well, that would be the airlines. If the airlines locked it in at a higher price, there's trouble. The transports, the rails, the reason that the rails have down so dramatically is that they are absolutely dependent on the fracking market in the Midwest. Because what you have there is this, is that fracking market in the Midwest, they're bringing oil out, they're bringing sand in. And so it's a two-way market out there. And a two-way market, of course, is a great market for the rails. Because most of the time, either the rails or the truckers, they have they're deadheading, okay? You get a problem moving out the other side. So we'll see where this baby is shaking out. But the transports themselves are saying, hey, guess what? Lower prices are coming at us. And the way it's looking is it's a lot lower prices. As we get into this closeout here, you get the S&Ps are at 2090. So what that's going to do, that number that I was saying a little bit earlier on the cash S&P, it looks that the cash S&P is going to close under this 93. If we close under 93.55, and I'm just giving you the last two digits. It's actually easier. I've started giving just the last two digits to a lot of indices because that's all you're really dealing with. So if we close under that 9355, guess what? That is saying that there is a much lower number in the consolidation that we're going to be going after now. You have two parts of this consolidation. The upper part is 3.9, and we're at 9.2. The lower part is at 1972. You know, so you're talking a big number, and of course we're going to see you know, just how much juice we have as it's running into that number. We go take a look at Big Blue, IBM. IBM can't handle it. You know, and IBM, what's going to happen there with the IBM deal? IBM is a very large mover inside the Dow Industrials. So, you know, IBM just came down from 175 to 167. It looks to me like you're going to be starting to run to that 155 level, and that's going to put some heavy pressure on the Dow Industrials. We take a look at Walmart, and Walmart is just a mess, folks. Walmart is not only making another leg lower today, but now you get juice behind the move. We've done 8 million shares out here on Walmart. Talk about a one-way shot, man. Walmart just went from 90 to 73 without a break, without breathing. That's really unusual. You know what's so unusual about it is that these large companies, you know, Walmart's the largest retailer in the world, right? They don't go up fast, but normally they don't come down this fast either. Even markets like to come down faster than they go up, but you don't normally see huge caps, large caps that are monsters go down this quick. You know, Walmart is at 73, and bottom line is it's making its way down to this, looks to me like it's making its way down to 60. And, of course, what the problem's going to be is that once you get back inside $70.25, Walmart's toast. Because Walmart had broken out of a 12-year consolidation. It stayed outside of it for 2 years, and when it broke out, it had lighter volume. Stayed outside of it for 2 years. You're coming back inside that consolidation, and you're coming back in with firepower. That is so dangerous, it's unbelievable. Because what normally happens is that the projection is that you don't go to the consolidation. You go to where the whole consolidation started. And in Walmart's case, you're talking about that consolidation is down a long way, folks. And what so that's the technical setup. The fundamental setup, the reason would be is what? Is that as you're coming down, once you go by that consolidation, we have a 12-year consolidation, that would be saying that anyone and everyone has bought it in the last 12 years is a losing situation. That is hugely problematic. And you always want to tie those together, because even if you don't do anything with technical analysis, what you absolutely can do is that you look at a chart and say, okay, where is the most amount of trading occurred? Because that's where the most amount of people are going to own it. You break that level, and guess what? Everyone's in a losing position. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow right now is down 66. Nasdaq's up 6. S&Ps are off 9. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We have the Dow down 54, Nasdaq's up 9, S&Ps are up 6 and 7.5. Let's go to Frank in Louisiana. Hey, Frank, what's going on?
Hey, Tom. Thanks for taking my call.
Sure. Thanks for calling. Thanks for holding. Appreciate it.
Oh, you're welcome. I have a question about IBB. When is it going to break down? It's got several high-volume lows, and it just won't give. Today it's up.
Exactly. Well, let's take a look at it, because what you have here, folks, the IBB wants to go dramatically lower. And the bottom line is it just doesn't give it up. We are at 367, and the 374 is the high, of this consolidation, and the low is down there at the 330. What I can, if you're looking to short it, what I've done is this, okay? I'm short Amgen with some puts, because I decided after doing the IBB a few times that, the bottom line is it would be better off shorting some of the equities inside it. And either Amgen, I have Amgen. Then another one that's in there that you can kind of rock with on the short side too is Biogen,
So do you not think the IBB in general is going to break down or not?
Yes, I do think it's going to break down. I'm just trying to give you the higher probability trade inside it. Do you know what I'm saying? Yeah. It
goes up on light volume. It goes down on heavy volume in the past.
Oh yeah, no, it's toast. It's toast. I'm just giving you just what I've done. Do you know what I mean? Because I got stopped out twice of the IBB, and all these other short positions we're making money on. You know what I mean? So it's like, okay, I got to get something inside it. That's what I did.
Well, I have some BIS, which is the 2X short. I have some options on that expiring in 2 weeks.
Okay.
But,
well, that's
every time I get into them, they must monitor my account, I think, and run.
I know what you're saying, man. It's wicked. It is. Hey, listen. Think about looking at, if you're in that option market, think about looking at the options in the money of Amgen or Biogen. They both, Amgen and Biogen, look to me like ABC structures on the way down. Both of them.
Okay.
Okay, brother. All
right. Thanks, Tom.
Okay, man. Have a great one. Have a safe one. Let's go take a look at the SLW for our man Danny inside the den. The SLW, folks, is the silver Wheaton. That's the largest silver broker in the country, in the world, actually. And the bottom line is it looks just like the gold market, but I like the looks of it. They couldn't whack it out today. It came down to 1850, 1836. Is where all the strength was coming off the lows. Those lows generated on March 18th. So bottom line is I like it. FNV. Now FNV is Franco-Nevada. Franco-Nevada is a great indication, gives you a great indication of where physical metal is going. And FNV, folks, let me tell you something. It's a beautiful thing. If you're in the gold market, you got to dig it. FNV comes down to $49.08 today. Rejects lower price. Has 798,000 shares. It's going into the March 11th number, and that number is 1.1 million shares. So bottom line, in both cases, they want higher price. There's no doubt that we need wide price spread, accelerated volume in the gold and silver market. There's no doubt about that. What's encouraging is that they took it down today. They couldn't get it down 20, 30, $40, which you can do on gold. We're at $11.97. It's $11.89, folks, to take gold out of the ground and deliver it. So you're talking a commodity market. And inside a commodity market, can the price go lower than the cost? Yes, it can, but it won't stay there for a long period of time. It's the first part. Second part's more intriguing to me. And what it is, each and every time it comes down there, there's not enough juice to blow out the bottom. That's the first part. The second part would have to do with the U.S. dollar. and the U.S. dollar wants lower price. You know, this is a counter-trend bounce in the U.S. dollar. It had the wide price spread out here today, but it didn't have the juice inside the move, and in fact, it didn't hold the move. We were up 1,200 ticks. Well, we're up 900 now, which is not bad. You know, that's just over. We're up, actually we're up almost a penny and a half, I believe. We're almost. Well, let me just make sure of that. DXM5. So the high out here today, yeah, we were 95. Yeah, we were. We were up 1,500 ticks today, and the bottom line is that, you know, it gave back 600 ticks, and you have light volume. So the way that is set up for me is that that's set up that you get an ABC structure on the way down. That's where I suspect it's going to go into the swing point first, and we'll see if, in fact, it can basically take out that lower swing point. The Fed out here today, you had one of the central bankers, the president of New York Fed, which is really important. That's Dudley. He was out making a couple speeches saying that, let's see, that he felt that if the labor market continues to improve and inflation expectations remain well anchored, then I would expect, quote, in the absence of some dark cloud gathering over the growth outlook, to support a decision to begin normalizing monetary policy later this year. Dudley, who is a permanent voting member of the policy-setting Federal Market Open Committee, said in remarks prepared for a speech which he actually had done today. Now, if you notice, we're already in June, folks, okay? He said later this year. I suspect the market itself is putting rates up. So that's doing the Fed a favor. September is the next meeting. I don't think we're going up in September. We'll see whether in December it goes up. I suspect what you're actually going to have by that time is that we're going to be in election season in a huge way. So what is going to happen there? There's going to be pressure from both parties on the Fed, and it's going to be, you know, pressure not to move rates. Why? Because moving rates in general throws more volatility into the marketplace. Are the rates going to move? I suspect they're going to, but we're going to have a different dynamic, you know, because come December, we're going to have to listen to this garbage for another year and a half. And the rhetoric is going to be huge. And what you're also going to get, of course, is pressures that we won't even see. Pressures all over the place. Soft money all over the place. All of the above in order to basically, you know, generate votes and, you know, whether plus or minus. Market out here is going to finish out basically right where we started, meaning, you know, when we started this program, you have a halfway move down. The cash S&P, I believe the cash S&P is going to close under that number. That's what it looks like right now. Let me just check this out. And that's a big difference, folks, by the way. Yeah, well, yeah. That's a huge difference, man. There's a big difference of having a price projection of 2039, you know, which is 60 S&P points down, versus 120 S&P points down. Because what's happening right now is that we're closing under, well, we'll see. It's going to be really close. We're 1 point under it right now. And, you know, the S&Ps themselves, they're not going to close to 4:15. You stay right there, folks. We'll be coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, Whatever you think about, you bring about. Whatever you focus on grows. It's a TGIF, folks. Got our man, Mr. Dave White, with us, our tech expert at TFNN. We're going to be growling and prowling with you out here. Let's take a look at one of our quotes and see what we have out here. So this is an unknown quote. To start a better life or a better world or a better future is simply to believe that it is possible. We don't even know how strong we are, right?
Nope.
I know. It's pretty amazing. Market-wise, let's take a look at it out here. We had the Dow down 56, NASDAQ up 9, S&P's off 8. Gold contract down $4.30, traded $1,170 an ounce. Silver off 5 cents at $16.05. Platinum down $5 at $1,094 an ounce. Light sweet crude up 93 cents, trading at $58.93 a barrel. Bonds are toasted, roasted, all of the above. ABC structure on the way down. The 10 years off 27 ticks, 125.02. 30 years down 1 full point and 23 ticks at 149.21. And King Dollar's up 867 ticks at a price point of 96.36. It had been up 1,500 ticks, folks. Couldn't handle it. Euro is down 120 at 111, and the yen is up a penny and a quarter at 125.06. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Bottom line, folks, if you take a look at the SPY, your SPY's at 209.77. We had volume in the marketplace. Really subtle today, man. Sideways move, but guess what? They're unloading it, baby. 760 million versus 720 in the NYSE. 1.8 versus 1.8 in the NASDAQ for Friday in the summer. They
hammered it down. They got it up to 2,100 on the cash.
Yeah.
And then boom, 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 right back at it. And the rest of the day it was
flattening out.
I'll let you have a little. I'll let you have a little.
Exactly.
Just put a little out there all the time.
And so what we have here, folks, now is the cash S&P is under the 93.55, and we're only under it by a point. But what that does is that puts it in the lower end of the consolidation. So it's like, oh baby, because that lower end. So here's the two parts of the consolidation, folks. Let me take a look at this. Bring this back a bit. So on the cash S&P, we're at 2092. 2044 is the first consolidation, the lower part, which is not the end of the world. Okay, that's only what, $50. 50 bucks. The second consolidation, however, where we were trading in February and in December of last year, is 1972. Now, a close where we close today on a weekly basis, saying, guess what? You're dealing with 100 S&P points down.
And we had a 280,000 tick on the jobs number.
Yeah.
And of course, we've got a Fed meeting on the 17th of this month.
Yeah.
So they only got about 7 days or 10 days or whatever before we are into that.
Right.
And they're going to have to come up with an excuse if they're not going to raise rates, because it couldn't have been a more perfect number that said that they needed to raise sooner than later.
Right. And they're not gonna. The thing is, why
they're going to try to come up with something, right?
Well, they have to, I guess. Okay. I think the market itself will save them, because what has happened is that the bonds are getting croaked.
Right.
So the 10-year right now is at 2.4. We just went from 2 to 2.4. That's percentage-wise, that's a 20% move.
Right. But one of the other things, in fact, I had a caller call in a little bit, but get your opinion on it. But what I told him was, you just had bonds break a 30, 35-year trend line.
Yes.
Do you play something like this for short money, or is it like gold, which is my opinion?
Yeah. No.
That when we saw gold come off a 10-year do nothing.
Right.
Do you just play it for the first easy 10 cents and then walk away? To me, especially in the bonds, even now, you've got to be thinking long term.
I agree.
If you're taking a little money, then I think you're basically trying to pick up dollars in front of a bulldozer, right? You want to be thinking the long term on that.
I would agree.
Move.
And you don't get a lot of chances like that in the marketplace. That's the other side of it. Now, in order to do that, then you're going to have to get creative, though, with a real type of long-term strategy that won't kill you if it doesn't fall apart right here and right now. Do you know what I'm saying?
Well, I mean, you could do something like the TLT or something like that, right?
You could do the TLT. Yeah, because the TLT is in a monster ABC structure on the way down. You could do the TLT. You could the TLT broke and broke with volume. Right now, we're at 117. 110's the number. Let's go look at this, because this is where you can. We could do an option show now, because see, this is where, folks. Okay, if you're right on the aspect of it, let me just see how far we can go out with these options. Because what you'd be doing, you could create a synthetic short and collect premium the whole time.
It would just be my thought that in fact, let me put it this way, it put me back to the time where we were buying BGO, a gold stock, for a quarter, and I sold it at $2 and thought I was a king, and of course it went to $6 by the time it was all done.
Yeah.
It's especially when you get these monster turns in markets like bonds that like to trend as long as they do. It just seems to me that everybody's very short-sighted about what's probably longer on the bonds, and by implication, the equities on the opposite side of that.
Right, and so the way that you can do that, you can do both. I mean, you can trade the heck out of it and have some long-term, positions and trade around it. Because what does happen there is that your cash flow would stay really good. Now, you are giving up, right, what you're talking about, because we know that each and every time that you get in the market, the risk goes higher versus, like laying a nice strategy out and saying, okay, man, I'm going to be in here for a year and a half. I'm going to, set it up and have stops in. We're not saying not having stops in.
I'm not a big bond trader, never have been, probably never will be.
Yeah.
But
they're fun.
But what is a trend on it? Is it going to be a 5 or 10 year trend off this bottom, or is it just going to correct in 2 years and be over?
Well, here, if we bring this up, I'm going to put the 30-year up, folks, and I'm going to put the 30-year up, and this would be the big juice that you go after. So what we're going to do here, I'm going to put the 30-year up for you, and I'm going to put it up right from the beginning of the bull market, okay, which is just a mind blower, because we got to go back 30 years. And what you're going to see is that, we were at 74. So bonds went for 74. When I'm saying 74, so check this out. You're paying $74 for a $100 bond. And that's $74, you're getting 14% interest. And that's a $100 bond, by the way, okay? So that went from 74 up to $1.64.
Right.
Okay? Now, on the way down, you first, I'll bring this in closer so we can see this. Your first correlation is we just made it this week. This is what's going to be a mind blower here. We got inside the lower range.
Yeah.
So your first correlation, you're at 151, is, guess what? Is a monster move. Is 127. Now,
would you see a symmetrical time frame, or coming back down
faster?
Yeah. Because it's everybody keeps talking about bonds being illiquid today, and I really don't have a frame of reference to go after that.
Okay, so when you're hearing that, what they're saying, folks, is that you and I trade in the bonds. You can trade in and out of these and be liquid by 100 contracts in a second. What is illiquid are the corporate bonds.
Okay.
And they won't be able to get out of them. There's no one, treasuries, what happens, everyone's going to get their money back, okay? But like Bill Gross couldn't get out of treasuries. If you and I were Bill Gross, we couldn't. On the futures market, yeah, you're going to be able to get out 50, 100 contracts, but they have thousands. I mean, it's more than thousands.
I always speculated that Bill Gross acted like he was nuts to get out before he was trapped over there at PIMCO and all these things. And maybe he's just smart like a fox and acted like an idiot to get out before all this stuff stuck to him like tar.
I agree, man. Yeah.
Maybe he's that smart.
Yeah.
Or maybe he's truly nuts.
No. He's probably both. Okay. I mean, you can't stay in this, business for that long without being,
a little nuts.
Yeah, right. I mean, that just happens, folks. That's real. That's just, it's just a different MO. It's just how it works. But I suspect, it's not like bonds are going to go back to 14%. But the first moves, which we're in right now, you can absolutely see that,
Well, percentage-wise, they're huge. Massive, right?
Exactly. Percentage-wise, it's massive, okay? And I think that whole number has to do with inflation. Man, food's so expensive, it's unbelievable. I mean, you look around and say deflation's out here. Well, guess what? Not if you eat.
Nope. Eggs doubled 100%.
Yeah.
Yesterday.
And you got to eat eggs.
Yeah.
Hey, how's that Brazilian steakhouse? They double yet on Sunday? That Brazilian steakhouse looking
like
even
that.
better, right?
Yeah.
I know. Dave White, Tom O'Brien, you stay right there, folks. We're coming right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. We appreciate you growling and prowling with us out here. Don't forget, folks, at TFNN, we do live broadcasting every trading day. We start at 8 o'clock in the morning. We go to 6 in the evening. Our man, Mr. John Logan, kicks us off from 8 o'clock in the morning. Now, he's broadcast live, folks, from all over the world. He's broadcasting from the Philippines. Bottom line, they're trading the markets all night. They're trading Europe. He's kicking us off here in the U.S. Larry Pesavento is 9 to 10. I have a program now 10 to 11. Basil Chapman, 11 to 12. Then we're going to have Daryl Martin, Thinkorswim. Steve Rhodes now is from 1 to 2. Our man Dave White is 2 to 3. And we kick it back here 3 to 5. And Andy Heck is on 5 to 6 on Tuesdays and Thursdays. All that programming, folks, you get right on your cell phone, TFNN.mobi. Now, Dave is on every day, 2 to 3. Outstanding show. He has 2 great newsletters. He has the Tech Insider and the Path of Least Resistance. You can test drive both of them right here and right now. The Tech Insider is a longer-term investment newsletter. Path of Least Resistance is the active newsletter. Come over to our website at TFNN. You go into newsletters first, and then you can go into trading and or investing or both. Right now, we have a slide up, and I'm looking. I said to Dave, what is that, man? You know, it's a little blurry. And tell me what it is.
Well, MIT has had a robot that they called the Cheetah. It's the one that you've seen running. Well, it's all good and well to have a robot running today.
Yeah.
But what this one has done is showed that it can avoid obstacles. And what they've put out in front of it is a hurdle. And they can actually jump over a hurdle and land on all 4 feet with this robot.
That's crazy.
At about 30 miles an hour.
At 30 miles an hour?
Yeah.
So this is really going to be like the Star Wars killer shoot 'em up bang bang deal.
We're really getting to the point where, at least for mobility, robots are really showing, they're really figuring out how to do a lot of the stuff. Now, the purpose behind this is that the military has wanted a vehicle that could go through rough, unroaded terrain to resupply.
Okay.
Like
troops,
troops with anything that they need.
Right.
And that's basically what this is. They're looking for at a price, and they want to build these things at $200,000 or less. I don't know how close that there are, but the idea is that they'd be able to roll through mud, go and jump over things, do everything, and they've got it working. And this is the MIT labs, but I think they're working on a DARPA contract to come up with this highly mobile. But it's kind of neat. It was last week. We didn't get a chance to get into it. I wanted to talk about it before we went and got started with everything else.
Intel, Altera, and Reese's Pieces.
Well, remember, you got your peanut and my peanut butter and my chocolate. You got my chocolate and your peanut butter. Remember those ads?
No.
For Reese's Pieces?
But I love Reese's Pieces.
Okay.
I put them in the freezer right now.
Well, Intel, of course, bought Altera out earlier in this week.
Yeah.
And they've been courting for a while. Intel had started making their chips over a year ago. And
did they?
Yeah. So there was.
They started making Altera chips?
Yes.
Oh, for Altera?
Intel was making Altera's chips.
Okay.
Right?
They got to see a lot.
Yeah,
that's awesome.
They got to see a little bit out there. They got to see the volume that Altera was doing.
Right.
Right? And so they've been talking over the last few months, maybe 3 months, about literally buying them out. And why I thought it was a good business, I didn't really see this week until they started to explain what they truly want to do. But what they want to do is, you've got peanut butter that's good and you got chocolate that's good.
Yeah.
Altera makes programmable chips.
Okay.
Right? That you can actually change how the silicon acts inside of it. Intel makes general purpose processors that nothing changes. It's what you give it. You basically put some data in RAM and you tell it to act on that data in RAM.
Okay.
But what that processor does is exactly what that processor is going to do until you throw it in the landfill. Right? It's never changing. The programmable chips, you can actually change the logic. What they're going to do is sell these chips into the server business, and for special case use, like compressing video.
Yes.
Like,
which is huge. Yeah.
And other things out there, including security. They're going to be able to, at the time the computer boots, upload the program to basically this Altera chip sitting in the same chip as the Intel Xenon processor.
Right.
And they're going to be able to do a lot of very special things. And
because you as a programmer, what ends up happening, just so we can explain it, you as a programmer, you would take these chips and then you're programming that in, and what you're saying specifically is that if it was just the Intel chip or the Altera, you only could do one. In this kind, you're going to be able to basically have the mix, right?
Right. Let's say that you're buying one of these big Xenon processors and they're $1,000 or $500 for a big server. Some things are very processor, take a lot of the processor, right?
Okay.
You can take and remember the old days where they would sell the Intel chip and then the Intel chip with a coprocessor?
I don't.
With the math coprocessor.
Okay.
If you were doing math, it was real slow. Then they'd upsell you to the one with a math coprocessor.
That's right, yes.
Right?
I do.
This is the same thing. They're going to make the code available to do things like compress video and do other things. And if you did, let's say you've got a $1,000 chip, by putting this Altera part in it, maybe you raised the price of it $100. So now it's $1,100. But that part is going to compress video twice as fast as that processor that cost $1,000 did.
So it puts them, Intel, in a huge, great position, doesn't it? Even though they were already in a great position, but it's even heavier.
They own 98% of the server market today.
Really?
There's nothing closer to a monopoly than Intel. But here's where I'm thinking that what they're going to do is figure out how this all works in the server market. But guess what would really be neat for this kind of technology, and that is as they keep moving down market and to the point where they get into a smartphone and things like image recognition. Just look at your camera and have it. We're going to talk more about this later. Have the camera automatically know it's you, right? Instead of putting in a pin, instead of putting some other things.
Right.
Well, it's happening already this fall, and we'll talk about that in a little bit in another story. But there is a lot of synergy that I really didn't think of when they were buying this. So I think it's a pretty... They spent a lot, $16 billion.
Is that going to put pressure on Micron?
Micron's all but out of business.
Okay.
Yeah,
just curious.
In fact, if Microsoft hadn't picked them to supply all the Xbox chips, we probably would be looking at AMD at a 50-cent price point instead of whatever it is in the $2 range. Whatever. So yeah, in fact, AMD is kind of like kind of like Apple was at about 2002. If Microsoft hadn't thrown a bunch of money to them, they were at the point of going out of business.
Well, he didn't have to, but he was smart to because they were all over him, right?
Right, from the antitrust. Antitrust. We'll make sure there's another computer company out there, right? He probably just gave them a little bit too much money, right?
Yeah, right.
Just a little too much.
Can you imagine? That's pretty crazy. Apple streaming services, right?
Right. We've got WWDC, which is the big developer conference next week from Apple. And probably the biggest part of that is Apple's streaming service. Interestingly enough, it's almost kind of the same thing of the Greeks. All these people on the opposite side, the labels, are making Apple sweat right down to the last minute on Monday. As of when I started driving over here, there was still nothing about them making a deal with them. Yes. So this is kind of the whole brinksmanship from people like Sony and the other big music labels out there of whether they're going to give the content to Apple or maybe even make them sweat a little more about it.
You stay right there, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us. Dow finished down 56, NASDAQ up 9, S&P's up 6.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per a $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. We're talking Apple streaming services. So they're still trying to make a deal with these music companies.
Right, and they haven't made it, and it starts on the conference starts on Monday.
So you think the music companies already made deals with Pandora and with Spotify and a couple other ones.
Right.
It's probably about how much cash Apple wants to pay them, and Apple never wants to pay for anything, right?
Correct. They go, but if you don't deal with us, then you'll be nothing, right?
But that's not the case anymore.
The problem is if you go to a streaming service,
yes,
and it's only got half the music you want, you kind of get disappointed. I went to Spotify yesterday, and I was looking for a Rod Stewart song, right?
Yes.
Didn't have it.
Okay.
So I'm going, right? It's kind of like going to the grocery store thinking, I'm going to get some milk.
And so
we don't have
Is
milk.
Apple trying to get everything? Is that what?
Right. They want to be able to lock up at least 90% of the business.
Okay.
Now, the problem they had before was no one would sell to them at all. And then they bought Beats, and that gave them about 60% of.
Oh, interesting.
They got in through the back door on that way.
That's how they wanted to do it.
That's the way they had to do it because everybody
couldn't stand them. Yeah.
Well,
right.
They're so mad at them for blowing up the market. Now, in reality, did Apple do it? Would it have happened anyway? no real way to tell, right? There's no alternate history where they didn't do it.
Right.
But Apple pretty much commoditized single song music, which really has hurt the music industry. They're making about 1/10 what they did in 2003.
Yeah.
And as far as they're concerned, Apple was the problem.
Sure.
And, you know, they were going to try to launch Apple TV. But the exact same thing is happening in Hollywood, which is, if we're going to make a deal, we're going to make sure that we're the kings of this deal, and Apple doesn't end up being the dog and us just being the tail, right?
I think the TV thing, they've already missed that whole deal.
They kind of missed the window of opportunity out there.
Right.
But anyway, they're going to have a lot of stuff next week. A lot of it's going to be wrapped around their desktop programming.
Yeah.
Not probably so much the phone, but one thing you know is that the PR machine in Apple never is silent during these weeks, right?
No, that's good to know.
They'll be, the cheerleaders will be out.
That's good to know.
So you're probably going to have at least Apple, not even if the market comes down, my guess is Apple will be silent.
It hasn't budged, man.
Well, I think it was down to 128 today, wasn't it?
Yeah, no, it's down 71 cents.
Yeah, but it's not a big deal. Now, the other big thing that they will probably be bringing up a lot next week is HomeKit, which is their API, the way that the programmers need to write programs to access all the Internet of Things, like thermostats,
which is cool,
door locks, all that stuff. Now, this thing was a huge...
Did they buy this off someone else?
No, they made it. But the problem was they tried to release it 4 months ago, and it all blew up in their face. Everything didn't work. Everything was wrong. One of the few huge missteps that Apple has had.
Sounds like Bill Gates said something about 20 years ago, right?
Yeah. That was one of those monster problems, right? Now, Apple's very good at not controlling the media to the fact that they'll give them a big story, right? Just ignore this for a while. They're very good at manipulating the media, much like politicians are.
Sure.
But my guess is if you're going to hear about anything big next week, it's probably going to be out of this HomeKit business.
Is this going to be easy to do, the HomeKit deal?
Well, Apple, you got to assume that they're going to try to make, you know, the best software that's possible.
Because that's a big business, man.
It's going to be a big business to be able to turn your lights on and off.
Right.
I forgot to turn the oven off. You know,
well, especially
all that other stuff, right?
So picture this, folks. You know, what happens, I guess, across the world, and you know, that depending whether you're in cold weather or hot weather, but where we are, you know, the air conditioner is a big deal, and monitoring that temperature saves you a fortune for us in the summer. I mean, on the electric bills, it's big money.
Or someone rings the doorbell and you see it on your phone, who's at your front door, even though you're not there.
That's a beauty, yeah.
Right? There are a lot of those kind of things of home automation that are all going to come out of HomeKit, but this is the second edition of HomeKit, and I would assume that it does finally work, right?
Okay.
So programmers are probably going to be happy with that. Now we get into self-driving cars. A little more from last week, since it's been kind of a theme over the last 3 weeks.
Yeah.
I just thought it was very interesting. Google's had several cars in accidents this week, and they've all been rear-ended by other cars out on the road.
Because they stopped too quick, you said, right?
Well, they drive exactly to the letter of the law, and that's not the way, especially in California, people drive, right? Yeah. They don't stop right at the line. They don't stop right at the stop sign. They pull up and start turning right a little bit already. They start doing a lot of other things. And the problem with
that... And the self-driving car does not do that.
Right. It drives to the letter of the law.
Sure.
Creating a big problem.
And, of course, what happens there, folks, okay, just like all of us know, if you stop too fast, even when you have a red light, you always got to look behind you, because that's when it's always dangerous. That, you know, someone's looking down, they're texting, they're doing anything, you know.
Everything.
They come right in. Yeah, they are.
Yeah, they're doing everything.
That's the way to look at it, that they are doing everything. Comtex, that's the next one. We're looking at a guy with a bunch of nice little screens here.
Right, Computex. This is the big convention in Taiwan for all the computer makers, whether it's Dell or Lenovo or all the other ones. Now, what we're looking at is a picture of a rep from Microsoft in front of all the new Windows 10 machines. What we found out this week is that Windows 10 will ship July 29th. They've modified slightly the terms of the sale. Originally, it was going to be after the first year, you would then have to subscribe to it. The way it is now, at least what they're saying, is that if you upgrade and you have Windows 7 or Windows 8, you can upgrade for free for the first year.
Okay.
That implies that you'll have to pay for it after. You don't. You buy it or you get it on your machine, it's a free upgrade. What happens is if you wait a year to upgrade, then they will charge you $119.
That's good.
If you
man.
build another machine that doesn't have Windows 8 or 7 on it, you have to pay $119. So it is kind of a little different than what they kind of made it sound like to begin with.
So they want people on it. That's
they
the bottom
want people
line.
on it.
So they're going to be selling other products on it.
You've got the first year to upgrade. If you don't upgrade in the first year, it's going to cost you $119. So what was really neat was they were starting to show some of the stuff that I'd kind of read about, but was unclear when this stuff was going to come out. We were talking about it, I think, during the break. Earlier in the segment. What all the new Windows laptops, notebooks, those kind of things are going to have is a new kind of camera in them, and it's called Windows Hello. And when you stand in front of it, it is not just a regular RGB camera with color. It's an infrared camera. And by infrared camera, they can see whether you're a regular human in front of it or just a picture of yourself in front of it to unlock it.
Wow.
So when you don't have a password anymore, you stand in front of the thing, and you could be 3 feet or 1 foot away from it. It will recognize you, and it's got software in it that's smart enough to know whether or not it's a dummy's head or a real head. You got to prove sometimes that you're a human to unlock it, but there's no more passwords. And because there's the way that they've got this set up, and there's no password, there's no way for someone to come in and hack you on the outside because there's no physical password for them to try to get.
Right.
It is locked to the machine.
That is so cool, man.
So what you will have to do to break someone's machine is you will have to have physical access to it.
Cut off the head?
It's part of, yeah. Except you wouldn't be live. It'll tell you it'll tell you like frown, smile, prove that you're alive.
Wow.
It's really, they've got some neat stuff in it. It's all part of a thing from Microsoft that was out for a while but didn't take off because it was too hard to actually use. But it's called a trusted platform. And that's basically, but
this thing's moving quick about how we are getting into being robots, basically.
Right. But what's real, the other part of this is how you've heard of rootkits on computers, right? Where you get the virus and you can't get it off the machine ever.
Okay.
Those are called rootkits. Basically, they infect the very beginning part when the program's booting. It's got to boot up at some point, right? That code that boots up's got the virus in it, so you never get past that where you can take it out.
I see.
Well, they're basically changing the way that all works in Windows 10, and all of this is so that you can go to the enterprise and say, you don't have to worry about rootkits anymore. We've basically made it 1,000 times harder to write a rootkit virus than it was before. And all the files are signed. It's a kind of a cryptographic way of proving that it came from Microsoft.
Right.
So somebody else trying to hack it would not only have to write the code to defeat it, but also would have to figure out the way Microsoft actually writes and hashes the codes. They would have to find a number that is bigger than the amount of grains of sand on the planet. They would have to go through all of them to find it, right?
Exactly.
So it is a lot of Windows 10 is specifically going after some things about consumers, but a lot of things about corporations and trying to get them to upgrade as soon as possible.
And that's huge, man. I mean, because I knew security was always going to be a problem.
Right.
But not as big as problem as it really turned into. You know what I mean? Because it just seems like it's nonstop.
Anyway, we've got that. You've got, we'll go back to this. We got only just a few seconds here. I wanted to say, July 29th, so we're less than 60 days away. A lot of new computers coming out, and we'll probably see more about that next week, I would imagine, in the news.
Nice. You stay right there, folks. Dave and I are coming right back. Dow finished down 56. You get the NASDAQ up 9. S&Ps are off 6.5. The cash, S&P, folks, closed at 2092.83. That puts it in the lower end of the consolidation. That's where we're going next week. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. Next slide that Dave has up, it says Robo-Pancreas.
Right. This is there's several companies out making basically implantable pumps for insulin. This is one of the, if not one of, or if not the biggest part of the business in healthcare.
Okay.
That's people that have diabetes.
No, totally.
Especially
huge, wicked disease, right?
Yeah, and kids can start onset at 3 years old.
Right.
Normally, adults don't get it unless they're morbidly obese.
Right.
And they will get it too.
Right.
But this is really aimed at people that develop onset of diabetes, not because of anything that they have done in their life.
Right.
They just get diabetes.
They have it, yeah.
Right. And it's still a huge problem. But I think I was telling you during the break, most people don't think about it, but I've seen people that have had trained dogs to sit there and smell the breath of people at night because if they're asleep, there's no way for them to figure out, hey, I need insulin right now.
When they get a diabetic spike, does that mean, is it higher blood sugar or lower?
It can be either way.
Both, I see.
Right.
Okay.
It can be way too high or way too low.
It's the harmony that we need inside our system, right?
Well, if you're regularly, your pancreas and your systems inside will figure out whether you need more or less, right?
I see.
So they're always...
So your pancreas releases it then?
Right.
I get it, okay.
And you always know. So what this is what they've come up with, let me put it that way, are a lot of new sensors. And these sensors are always checking to see your blood level. Instead of pricking your finger and putting a drop of blood on it to figure out what it is, it's just constantly monitoring it. Now, they've had these out and testing them for a year. It looks like they're going to be approved probably early next year, but I suspect it's going to be a huge business. One, just because people aren't always checking their blood level. This thing does. And by not always checking your blood level, it's easy to get way away from your center line, right?
Sure.
And then you get off into the weeds, and it gets very tough to get centered and get the right level once again. I've never been diabetic, but I've known a lot of people that are.
So I guess what you're also saying is that this will save a lot of fingers, arms, and legs, probably, right?
Right. The problem is that it really hurts any kind of tiny blood vessels, which tend to be in things like your ears,
the extremities, right?
Any of your normal extremities. So what this will be, or at least the way they're testing this, mostly in Europe right now, is that they'll implant this device with the insulin. You go for about 3 months and you come back. And they download all the data, and they slightly adjust the way that your body reacts. So if you need a little more, a little less, it's just like bringing your car back off the racetrack and saying, hey, I need a little adjustment.
You know, there's going to be, folks, there's going to be a show on Tiger TV 50 years from now, and someone's going to be saying, you know, let's detach this arm where we're on, and there'll be a new David White and Tom O'Brien. They'll be saying, let's do this, and we put it back in here. It's like, oh my God.
Currently, it's got a Bluetooth interface, so you have your smartphone, and you can actually modify it. And of course, the first thing everybody thought was, who's going to be the first person that basically tells it to pump nothing but straight insulin and kill somebody with them? Because you could literally have an OD from insulin, right? Or turn it off. So there's everything we're getting into. Not only is something great, but you always have to worry about the security implications of somebody trying to use it poorly. And they're already looking. It may be out already, but they're spending the next year to figure out how to handle the security concerns of somebody being able to manipulate how this works.
You know, it's so weird. He just reminded me, folks, that I got to remember. I think I brought up this movie before. It's the movie that what is the currency? Oh man, it sounds just like that because the runners of all the government, they can turn you off in a second and you die.
Was it like Logan's Run when you turned 30 and died?
No, this one here is that you get to 25, and then once you're 25, you only have like so much currency. And the
oh yeah. I know which one. I didn't see it, but I know which one you're talking about. Oh, you got to see it.
It's an amazing movie, and
you can buy a little more life.
You can keep buying life. Okay, that's the bottom line. And if you don't buy it, bottom line is that you go. And what it is, the end of the story, folks. Well, yeah, I'll remember the movie. So you got to see it. It's a great movie.
I saw one like that. It was slightly different.
Yeah.
You would rent and lease like kidneys and everything else in a heart.
Yeah.
And if you didn't make the payment, they came back and repoed it.
Well,
from
that's
you.
what they do. The reason, the one Justin Timberlake was in, Bill. Yes.
Yeah, that's it.
What happens in the car business right now, the reason that you see so many ads, folks, that walk into this car place, you'll get the money no matter what your credit
under
is.
the dash thing.
They have these sensors under the dash, and if the payment doesn't come in, click, it goes click off, and that's it. Your car stops.
Right.
And then the fines you pay are insane. Because, of course, everyone needs a car to go to work.
Right.
You know?
So they come back to it.
Yeah.
Anyway, these will be on sale next year. I think if you're interested in any of these medical companies that are going to be selling them, you want to be watching very close probably in the first couple of months of next year, maybe the third month.
Well, you should go try the Tech Insider, too.
Well, that's
bottom line.
I'll be reporting about it.
Yeah,
that's true.
Totally.
But
it's, we're in a dynamic time, aren't we, man?
It is. But I have a feeling this may be one of the largest implantable smart devices, a market for it, that we're probably going to see in the next 5 or 10 years.
Yeah. Amazon small potatoes. I love this. This is amazing.
Well, we talked about the one-day shipping last week.
Right.
But now even things that are tiny, as long as it weighs less than a small
potato. And you don't need Amazon Prime.
Or you don't need Amazon Prime. You'll be able to get everything shipped free to your house. So also, if you're looking for that kind of stuff, it's just going to be, I mean, they're really doing everything in the world to make it sure that it's hard to buy anything anywhere else.
Well, did you see, Walmart looks like it's in trouble big time. I mean, Walmart folks just went from 90 to 74. And if it gets under 70, it's done.
Yeah.
Okay? And it's like, it just blows my mind. It's like, okay, is Amazon hitting them that much? And I start thinking about it. The retail business, the margin is so thin that you don't have to hit them by a lot of money.
Well, except Amazon's is just as thin too.
Yeah, except what the difference is, with Amazon, they're not paying for any of their products because even this is a third-party deal.
Yeah.
What's happening with this, folks, is that it's a third-party deal, so everything is after the fact. So picture, cash flow-wise, right? If you're paying for it after the fact, as long as your cash flow keeps going up, you're all set, right?
It's fine.
Hey, I bet you'll be using it a lot.
I already used the one-day thing. I've gotten 2 packages in one day so far. So I'm pretty happy about that.
I'm definitely going to use it a lot, man. I mean, it's one of these no-brainers because if it's free, you get, you say, oh yeah, I need this, this, and this, and I'm already set up on Prime anyway. So you know how easy it is ordering. I mean, and they make it so easy.
You know what's easy?
What?
Go to the front page of TFNN and check out my newsletters.
I'd like it.
Both my weekly and my daily newsletter.
That's right.
And you can
test drive it 30 days, folks, absolutely free. And always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything is right inside us, folks. Grab it and have fun with it. Have a great weekend, safe weekend. Thanks, Dave.
Okay.
We look forward to a great week next week. Be here with us, folks. Go get 'em!